Good afternoon. My name's Tony Cardenas, and this is the Indianapolis Real Estate Market Weekly Update. Today I'm sitting here with Kyle Morris with FC Tucker, Shelly Walters with EXP Realty here in Carmel, Indiana. And we're going to talk about the market changes. What's going on? Our house is slowing down, selling. What's going on with the pricing? And then we're going to get into the stats for the Hamilton County market. So kick it off, Kyle. What's going on in the market? What are you and Shelly seeing in the market today?
Well, I think really, we've been talking about this for a while now, that the market was starting to pivot, and we had the numbers to back it up. But I think as a consumer, it's really hard to feel that, right? When you're writing an offer and it's not getting accepted, and you're over a list and all these things. And we were talking about it, that it's not just a light switch, but you got to look at the quantitative data to actually look at it. But all the evidence is there. This week's a little bit different. That's one of the things we're going to talk about. It's a holiday week. There's a lot going on, schools, et cetera, et cetera, et cetera. But it's in the numbers, but it's starting to become more national news. Even we were ahead of this a couple of weeks ago. I think we kind of could look at it, but I think when you actually look at what's going on, it's actually starting to get some media attention, and so we just kind of want to walk people through what that actually looks like. This softening of the market. It's not like a hard pivot by no means, but the environment has changed for sure.
Shelly.
Well, some of the information from the national market update for the real estate is new home sales are down 16.6% in April. That was a fall of the fourth straight month, and it's down 26.9% from a year ago. So it's definitely on its way in a big change. We've been talking about that, like Kyle said, for about 3 or 4 weeks here. We started to see it. And then in the other items is that we've been talking about 7 straight weeks of declines for the 3 major stock indexes. I think that hurts a little bit too.
Sure does.
And then the other issue is we're seeing a lot of the home sales. They are going down. They were down 3.9% in April nationwide. And then there's an ongoing housing shortage, and properties are listing and selling swiftly, but not all of them now, because we are seeing days on market start to tick up.
Yes, and with really the mortgage rates aren't too bad. I'm looking at them today, and you would have thought by all the news we had in the last 2 or 3 weeks we'd be hitting at 6%, but we're not at 6% on a 30-year fixed today. If we had to lock somebody in on a purchase, man, if you had 30 days to put the guy in the house and everything was rolling smooth, it's 5.25. If you guys said, hey, can we squeeze it to 5.125%? We probably could squeeze it to 5.125%. So it's not bad. And then you got your arms that are in the 4s. You could probably get to 4.5 on a 5-1 arm, or 4.750 on a 7 arm. Okay, and those are really pretty decent rates when it comes to all the other turbulence in the real estate market. But let's talk about how long are these listings, like in Carmel, Westfield, Noblesville, Carmel market, Indy market. If something's out there for 400,000, 450, 385, how long are these things staying on the market right now on an average?
It's so dependent on the house. To like what Shelly was saying, you still get the unicorn Pinterest, like HGTV, just absolutely beautiful house. It's going to go.
Of course.
Everybody wants that, right? But, a couple weeks ago it was 4, then it's 7,
right.
10, I think is probably where we're at.
Yeah, right now today the pendings for both Carmel, Westfield, and Zionsville all actually are 10 days on the market for pendings that are showing right now for the past 7 days. So then that would just show that, like he said, we were talking about this, we were kind of joking, and everybody said, what's the days on market? And it used to be like, oh my gosh, if you had a 1 day, that we were all excited we could sell it in a day. But now we just kind of laugh and go, there's no such thing really as 1, 2, and 3 days. It's 4, but it's no longer 4. It's an average of 10 days on market.
What are people doing right now, since the market's changing a little bit? What are they doing on inspections? What are they doing on, where are we at on inspections?
I think inspections have come back for the most part. You still see them where they're getting waived if somebody's trying to be ultra competitive. But I really think last year, that became such a trend. There really was kind of some kickback about that, not just from multiple industries, right? Like,
absolutely.
So, as a consumer, like, there's ways to still get an inspection, and the sellers still feel comfortable that, they're not going to get bled out on repairs or anything like that. And so at a minimum, I see them now for, inspection for educational purposes, or there's a cap on, whether a total dollar amount or an individual dollar amount, which is reassuring for Shelly and I. We last year we were really competitive, but we still did inspections on all of our houses.
Yeah, I never want to see a buyer.
Yeah,
not
we
have
did it
an
for
inspection.
informational purposes at a minimum,
At least,
right?
yeah. And a seller really needs to understand it's for their protection as well. You do not want to have somebody come back after they've lived in the house for 30 days and say you knew this issue existed. Whether or not they did or not, a buyer can really start to think that they were pushed into purchasing a home and the seller could have hid a bunch of stuff. So it's in everybody's best interest to have an inspection, see what's going on. And I always say, our sellers are not climbing around in their crawl spaces and their attics. They don't know everything that's wrong with their house. And I think we talked about it as well last week. If a seller does an inspection prior, it's just for everybody's best interest to get to the table without some major possibilities of, maybe lawsuits or something coming up if something was major. It's just better to inspect, period.
Well, some of it's education, right? Because if you sit down with an inspector, they're generally going to tell you an inspection is for defects, end of life, life expectancy and safety to a certain extent.
Absolutely.
But over the years, especially as you're more in a buyer's market, it was used as different things, whatever, which is totally fine. It's not a big deal, but I think it's education, as with everything in this industry, quite honestly, to go into like what Shelly and I always talk about, like it matters, you got to have somebody who is going to represent you, be an advocate for you, protect you. You need to use a professional. You need to have somebody who's in it on a regular basis and knows what to do. Like even the numbers, when we talk about the numbers, we'll run through these numbers, 100% skewed numbers, and Shelly and I could have told you that 3 weeks ago.
You're talking about for the last 7 days.
Yeah, last 7 days. We got a holiday week. You got schools getting out. There's a lot there to quantify as to why the numbers are different this week.
Well, let's go over your numbers, matter of fact, since we're talking about it. What's your first on the list for numbers?
So we'll do Fishers real quick.
Okay.
So last week we had 23 listings go on the market, right?
Okay.
And then there was anywhere between 180,000 to 1.1 million. Average sales price was about 450.
Gotcha.
So 12 of those are still active.
Wow.
Right. So only 11 went pending.
Exactly.
Right. And the number that went on the market was low, right? It was about half of what it was.
And it was a weird week.
It was a really, really weird week. And we'll probably see a little bit of a trickle down of that for this week's numbers, right? Because of Memorial Day on Monday, right? So, but in Fishers, there's 57 total on the market, right? So that means there's some stale ones on there as well.
Of course.
In Noblesville, we had 37 go on the market, which was higher than Fishers, which is, recently, Fishers has been higher, actually. Everything from $69,000 to $2.3 million. Average price was about $450,000 again. Of those 37 that went on the market, 24 are still active, right? So
that's telling you that the market is shifting.
13 pended. 58 are still just total on the market that were on there prior to the week before. So even if you were a stale listing,
absolutely,
this week hurt you because you just racked up another 7 days potentially, right? Because a lot of the buyer pool is gone because
Are some of those agents going back to the ones that have been sitting around for a week or 2 or 3 weeks? Are they lowering the price on these? What are you guys seeing?
We do. I think we see a lot more price reductions back on markets.
Back on markets are up as well. And I think that has to do with, we were talking about the inspections, is people are doing their inspections, and if they can't come to an agreement, they're back on the market again.
Well, Shelly, for our audience, explain back on markets. I know we have a lot of real estate agents listen to the show, but let's tell the buyer what that is.
So that just means that the house was on the market. It took an offer and accepted and went into the pending status. And then at some point during the pending status before closing, it went back on market because something in that transaction fell apart. And many times it's inspections right now.
Gotcha.
And then people are like, what's wrong with the house? And
Exactly.
Like, it may not be that big of a deal. It could be a very navigable situation. Or, back to the days on market. Houses on the market for a week, people are like, what's wrong with it?
Exactly.
Nothing is wrong with the house, right? 10 days on the market, 20 days on the market. Generally in the Indianapolis greater area,
right?
The things that are going to determine if a house sells is location and price, right? Condition.
Absolutely.
That's just kind of what you run into the most, right? And so if it's not selling, you're overpriced, or it's in a bad location. If it's in a bad location, you're overpriced for said location, right? So it's not rocket science. It's not like, $1 million listing or anything like that, so to speak.
Well, and it also comes back to the listing agent pricing it correctly.
Correct.
Because if they're looking, I say this a lot, if they're looking at doing the pricing by what the houses are selling for, you cannot price where they're selling. You have to price where they were listed. Because if you look back on days on the houses selling over the past 3 months, if you look at the list price for that neighborhood compared to the sale price for that neighborhood, if you list at the sale price, there's no room for escalation. And a lot of people will sit back and go, I'm not going to make an offer on that house because it's going to go way above the most highest house that's ever sold. So there is still listing. Your listing agent needs to understand this market in so many ways.
Yep. And prices were pushed a little bit, that's just what it was. Like, the market was very aggressive, and it's not too big of a deal to be 5 above, like where you would comp it at or something like that. You really can't do that. To your point, we look in some of these neighborhoods, and I see listings in the 440 range or 540 range, and then it sells for 500 or 600. But the 4 listings that went on market were all in that same price range. And then you've got, something that's like, let's call it 500,000, right? Like, so they're all pricing around 540, right? And they're selling for 610 or 570. Yes, that's a comp, and I have that value. I also had 3 buyers who went very aggressive. And with the market pivoting, can I use that as an accurate pricing? Like, I can use it as a gauge, but I also, to your point, I really have to pay attention to the list price as well, because you can't outkick the coverage, because now I'm expecting that aggressive offer on top of the aggressively accepted offer.
Right. And the
so now
buyers,
it's like a $60,000 or $80,000 jump.
above the highest that had ever happened. So you're
Right.
asking, if you would do that, and let's just say there are buyers out there, which we know some will do it because they can or have the ability to, you could literally see prices increase 40 to 50% if the buyers would allow that to happen, because it's going to continually go above and above and above. There is a ceiling. There's not a possibility to continue to do that. So you have to list in the market and let the buyers determine where they're going to sell it at.
Yeah, and buyers are speaking, right? So buyers are more educated. Buyers are more patient. It took a while for everybody to learn how to navigate this market. And I think
they're a little tired of it too. So they're
so much
tired.
buyer's fatigue.
Yeah, they're tired of being forced into situations where they're paying more than it was told to be appraised. They're ready to sit back and go, actually, I think what I hear the most, which is really, I think is an interesting concept, is they're actually seeing houses come on the market. Like, I think 6 months ago, there was the concern that, will another house come on the market next week? I have to buy this one. Exactly. And now they're like, well, there's 30 and 40 coming on the market every week.
Right.
I don't have to do that anymore.
I'm sure there's a lot of people from last year's wishes, in a way, be subject to interest rates, that they maybe would have waited a little bit, been a little bit more patient.
Yeah, it's hard though. It's such an emotional problem.
Right.
We didn't know. Really everybody kept asking us, what's going to happen? What's going to happen? I don't know.
But if you would have said that last year, all those people who bought 2 years ago,
exactly,
they're clearing like $100K on.
Yeah, they're already selling.
Right? They are. Right. So I don't know. It's just really interesting. As the market is softening, positioning, or pivoting, whatever you want to call it.
Softening.
Right. So we've spent a lot of time educating buyers here in the past, 18 months, a year.
Right.
I think it's back to educating sellers a little bit better here right now as well.
I think you're exactly right.
Educate them on, this is, it's as hard as it was to first navigate the buying process around April of 2 years ago. I feel like we're seeing the opposite now.
Exactly.
Well, we had talked about that too, is with your trying to work with a seller. If a seller gives you a phone call and says, I'd like to list my house, there's still a process then you have to go through. And it doesn't just happen overnight. It doesn't happen in a week. So we have to always, have a lot of education to the seller so they do get the best price for the house and they have the least amount of stress during the process and they're prepared for what they're going to have happen in the next 2 or 3 weeks to get ready.
Right. Exactly. Shelly, let's go over what you have for the Hamilton County area for your numbers.
So in Carmel, there is a total of 40 that were listed and 18 of those pended, so a little under 50%. So 24 of those are still active, anywhere from 200 to 1.7 million. And again, like I said before, it's an average day of market is 10.
Exactly.
That's on the pendings that are out there right now. Westfield, we had 36 were listed. 22 of those pended, so there's still 14, anywhere between 299 and 1.45. And I will say there was a little bit of a skew because on that one, I think one of the builders, it was one builder, they dumped a bunch of their sales that they happened, and it was a bunch of 1 days on the market. So that was kind of a skew in Westfield. And then in Zionsville, there were 11 listed. Still 7 of those are active. So only 4 sold in the past week of the ones that were just listed. Average price $240,000 to $885,000.
Wow. So the numbers are changing.
They are, but like we said, this is an interesting week, right? So we see an overall trend of the numbers changing. I think this week in particular is different, but that was predictable. Like historically, not an ideal week. You know, you're losing with graduation parties. You're losing with the race.
You are.
Everybody.
I mean, this is Indianapolis.
Pools are open.
Yeah. So,
right?
you know, what do we have a Memorial Day weekend? But it's Indianapolis
Right.
Memorial Day weekend.
Right.
Yeah,
So,
and
you know,
also, just like you said, the pools are opening. They're getting packed. People are. This is a great week for people to take vacations. I mean, you know, this is vacation mode, and not only in Indianapolis, Indiana, but we're talking about the Midwest in general. I mean, we don't live on the coastal lines where it's a little bit different.
The thing about that too is that conversation with your seller is this was not a good weekend to hit the market.
Right.
If you really wanted to have yourself exposed to the most amount of buyers out there. I don't think major weekends like this would be a time that we should really put it on the market. I know some people have to.
Right.
And that's a different situation.
Well, you know, I'm looking at a headline right here, and I do read a lot of the news headlines, but sellers are starting to, this is what the line says, sellers are starting to freak out. Redfin CEO sees a slowdown in the market. And it's actually exactly what we're talking about, okay? It's a great time to buy. There's a lot more inventory out there for people to choose.
And rates haven't gone up like we were talking about.
That's exactly right. And I got to tell you something. And it's funny that you hit on the rates because if you had a $500,000 mortgage on a fixed rate at 5.25%, and you go over to a 5-year ARM at 4.5%, okay, you got a difference of $228 you can save. And you'd probably be around 210 if you went on a 7-year. I would, of course, take the 7-year, just so my rate is fixed for 7 years. And between now and 7 years, I can tell you, we'll have another refinance boom. I promise you. Okay.
Or you'll sell your house because that's the average time somebody sells
That's
their
exactly
house.
But people are, because of what rates used to be, people are like, well, is this a good decision? Just because I didn't buy Amazon stock when it first came out,
Right.
and had it at this low rate,
Absolutely.
doesn't mean it's a bad investment now, right?
Well,
And
it's like,
real estate's never a bad investment. It's
Right.
just making the proper decision for your family. If this is what you need or want, then
Is it the
look
time
at everything.
is what you really
Yeah.
come into, right? Yeah.
well, that's exactly right. And, you know, we got a few more things coming on the show here in the next few weeks. So why don't you recap that for us, Shelly?
Well, I know next week's going to be a really good show. We are talking to Xander Foley and his team, and they're very, very strong in property management. But what their information that they're going to be talking to us about is this rental market and the strong changes in the rental market, which is something that I know everybody's talking about and is feeling, but they have some really good information to share.
Everybody talks about the housing market, and they leave that out, and everybody talks about what it's like to buy or sell right now. I mean, I help people with rentals, and it's been
Sure.
just as bad, if not worse, over the past
Very
18
hard,
months.
very hard. And the other issue is too, and he'll talk about, is having people who are in a lease. And if you're in a lease and you can just get told, if your lease says you have 30 days to be notified that the house is going to sell, that's what your lease says. So I really highly recommend that everybody reads their lease and knows what situation they are in, or what the owner of that property has the right to raise your rent. Because between those two, people are being put out on the streets in 30 days because the sellers or the owner is saying, I can sell this and make a lot of money, I'm out. Or they're saying, I know that the rates are much higher than you're paying right now, so in 30 days your rent's going to go up. Just know your lease.
Yeah, I have a buddy who, rents, and he got notified that it was going up $300 in 60 days. And
That's a lot.
that is a lot.
It's a lot.
That
It's
is
a
lot.
shocker for families
It is.
and people,
Anybody on a budget, that's a lot. And
Well, and then
anybody
you gotta-
not on a budget, that's a lot.
And then you got to find a place to rent in this crazy rental market in like 60 days.
And
Yeah,
the thing
and-
about that is they can't. So now they're forced to take the $300 hit because the next place they're going to look, if it exists, is probably another $500 or $600 more. So there is no win. If you're in a lease right now, make sure you know what it says.
Well, it's funny you said that, though, people, some of the first time buyers, maybe, in the lower side of things, there's some good FHA rates out there right now, and these first time home buyers, if my rent was going to go up $300 a month, or some cases I've even heard a little higher than that. Some of these people can go out and get themselves a fixed FHA rate, and they could actually get down to about, I'm going to say right now, if somebody really wanted an FHA rate, first time home buyer, you're talking you might even be able to put them in at 4.5% fixed. So that might qualify that buyer enough to get in right now. Okay, I mean, the days of the 2.75, they were too good. 2.5, they're too good. They're not going to be back for a long time. And really, if you think about it, that wasn't really a normal market. It was just here temporarily. But if somebody wants to buy a house from one of you guys, they get in at 4.5 on an FHA. You can actually do something.
Well, I think people are scared still, and
you're right.
They just don't need to be. I mean, I closed an FHA last week. I closed a VA today, right?
Right.
I mean, it's a competitive marketplace. It was $450,000.
And I had 2 listings where we took an FHA buyer. So the FHA buyer does have the ability to purchase in this market right now.
Absolutely.
It's changing as well.
Now, 2 months ago, different, but that's why you have to have somebody who's in it, because I mean that changed so like within 3 weeks. We started to see it. We're like, is this a trend or is this happening? And
yeah. And it's changing. And again, that's just having an agent who's in this every day to know that they can represent the FHA buyer. Because I do unfortunately know that I've had phone calls from buyers saying, I can't get an agent that will even work with me because I can only go FHA. Well, that's really sad. Mm-hmm. But it's possible.
Just about everybody starts with one.
Well, that's right. But here's the thing on FHA. They can go to americasbest.mortgage to look at rates on FHA to get pre-approved. But here's the thing on FHA mortgage, you could really have a payment. Okay, I'm talking about your principal and interest right now. You could have a payment of $1,520 a month FHA.
If it's a $300,000 purchase?
No, that's a $300,000 mortgage. So they can
mortgage, yes, right.
So you add a 3%, 4% on top of that, and they could actually get themselves a mortgage. Even at 2.5, they can get to where a family can actually afford a monthly payment.
And that $1,500, that is less than a 1-bedroom in Broad Ripple.
Right, and that's the thing that I think we really need to harp on.
Well, that's P&I right there, but you're right. It is less. I mean, at least they're putting their money into something that's going to eventually go up because
that's how people go into the next one, right? Mm-hmm. Is most people
and
don't actually have the liquid.
And you have tax credits for owning a home.
Oh yeah, they get the tax credits and everything, but you could get an FHA mortgage right now around 4.5%. And I got to tell you something, you might be able to get a little bit less. Okay, and it changes every day. So if someone wants to see rates, they could go americasbest.mortgage, fill out the rate thing, and you'll get an immediate email back from one of our loan officers, and to see if you can get qualified for an FHA. You sell FHA, you sell FHA.
Absolutely.
I sell anything.
Right.
Well, the thing about that too is I would highly recommend, like you just said, if you have any questions of what you could possibly afford, and especially if you're renting right now,
get pre-approved.
Go get pre-approved, see what you can do, reach out to one of us as a real estate agent and see what you can buy. And literally, if your lease is not up for another 8 months
or 6 months,
who cares?
Right.
By the time we close, you're down another month or two, and then pay off that or whatever, or find out if you can just get out of your lease. But there's ways out of it. So do not feel like since you have 8 more months that you're stuck.
Yeah, and FHA, and I'm not saying this to everybody, but FHA, you can get some lower credit score opportunities out there, FICO scores, to get yourself approved. Not only us as a lender, but, we're a big discounter. So the bottom line is you can get something that you could afford. And the city of Indianapolis, there's several places to live in the city of Indianapolis. And we're going to have Jess and Griffith on the show. We're going to talk about the inner city a little bit more and tap on the Broad Ripple market with you guys next week. But, that's really about it. The interest rates are in good shape. It seems like we got plenty of inventory right now, and we're going to get some more.
In the next couple of weeks. It'll go away.
Right.
Yeah, because some people did hold off this week, so we might have an extra group hanging over for next week, so it'll be a little bit higher.
I know I got some. So.
Yeah, there you go. Well, Kyle, if somebody wanted to get a hold of you, how would they be able to reach out to you, text you on the weekend, get a hold of you, ask you some questions about listing their home or buying a home?
call or text 317-649-5122.
What company are you with, sir?
I'm with FC Tucker, and our team name is Morris Property Group.
And Shelly, how do they get a hold of you and what company you work for?
You guys can reach me at my cell phone, 317-201-2601, and it's the Shelly Walters Realty Group with EXP.
Okay, and hey, everybody, thanks for listening, and we'll be on the show next week.